Okay.
No.
Wait, something is wrong. Okay. Something. Is my orientation correct on YouTube?
Yes.
YouTube. Hello YouTube. Okay, wait. My check. I suspect is wrong way. Wait, I'm trying to change it. Is it like that? Oh God. Okay, wait. Wait a minute. Okay, and rotated. Okay, we're great now. Okay, I'm sorry guys. Okay, is it okay now? Please check on.
No, it's yeah, the other way.
What?
Still the other way.
The other way.
We have to rotate the device. I think.
No, I
Still
already
locked,
rotate.
it says.
No,
It's
no,
locked.
no. I didn't lock it. Wait. No, it's Oh goodness gracious. Okay. It's okay. It's rotated.
You look at this thing.
I know. I don't know how to do it. It's a problem with.
That's all.
I think it's just do it the other way.
Yeah, but it's not as good really. Okay.
Go out and then
Okay, wait. Damn it. Alright guys, okay.
Very good.
Okay. Okay, wait a minute. Okay. Alright, good. Okay. Well, we'll leave it this.
What should we rotate again? The menu.
Okay, guys, having a bit of technical issue. Please forgive me. Just give me a minute. Okay. Wait, guys. Wow, how do I do this? Okay. I don't know. Get rid of
Just
this.
go in the menu again.
Yeah. Okay. The menu is here.
Let's
This
try that one
way.
again.
Okay. And then I do this. It says rotate device. Yeah, it's weird. Okay. Now I can't even get rid of this thing.
Let's go back to this. And
Okay.
then do this. The menu.
Wait. Yep.
Then do that again.
Okay.
Then go back.
Wait. Okay. Wait, guys. Rotate. It says.
Yeah. It's not rotating, right?
You know what?
You guys see?
What the hell? Okay.
Yeah, so we just do
Yeah. Why cannot this? I cannot even get rid of this.
camera.
No. That's not.
No, because you press this.
No. Wait. Careful, guys.
Yes,
All right.
there you
Good.
go.
Okay. We just go with this. Lama. Okay. All right. Cool.
You've never had this before.
I never. No. Because you guys wanted me to schedule it, right?
Yeah.
That's why I have this problem. If we don't schedule this, you know what? You move over.
This way.
Okay.
No, because I want to match with this one.
Okay.
Because otherwise you won't come in with this one.
All right, cool. Okay. All right, guys. Okay. So, today we are very fortunate to have Rhee from Endowus. Okay.
Hi, everybody.
Endowus, when I started off friending them, first of all, I don't think there was zero customers, and we were in a small office, and we were drawing charts on
Shop House.
we were drawing charts, thinking of how to launch, how to whatsoever. From that day, which was about 2017,
yeah.
to now, Endowus is now a mega company, okay? And Sam and I have been friends for all these years, okay? And I'm so happy to see them grow from strength to strength, okay? You know what? Endowus, this is now a mega successful person, and yet today when I see him, he dressed more lock than I do, okay? Yeah, so this goes back to my principle, rich people dress until they are like beggars, okay? So if you want to be rich, okay, you know, this is a okay, anyway, so jokes aside, we are very, 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 very fortunate to have him. Today, I want to bring him in because, number one, get him to share a bit of basics about money making whatsoever. The second thing I want him to also do is to have a very long Q&A with us, okay? Long Q&A with us, and so just to attest to it, I'm going to bring this down a little bit. It's a bit too high, okay? Excuse me, okay? Give me a minute, okay? Just to attest to it now. B&I has close to $1 million to Endowus, okay? So I only sell things I believe in, okay? Now I'm not collecting a single cent from him. He still owe me one char siu rice. Say yes.
Yes. You're asking, have you bought this meal?
Yeah, he haven't given me a char siu
He's never in
rice.
town.
That char siu rice is important.
It is.
I heard that it's reopened.
Is it?
It's reopened to another place already.
Really?
Yeah.
Okay, let's go.
The Keong Saik Street one closed down,
yeah.
then they reopened another place, okay? So he owes me one char siu rice. Now it's two char siu rice plus interest. It's compounding, you know. By the time you reach next year, it's 5 char siu rice. Okay. Yes. Yeah. So
I'll put some Siu Yok as well.
yeah, siu yok as well. Yes. Okay. Okay. So maybe we'll start with a few simple questions. There's a Q&A, but I want most of you to ask questions. Mr. Lu, your hair is growing very well. Well done. This is Korean hair transplant.
Very good. I needed to.
No, you're doing well. Okay. Yes. So I'll ask general question first. Some of you all have questions. Okay, I will get them. I'll answer them. But if I miss it, just ask again. It's okay one. Okay, because the question go ta 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 ta. I cannot see very clearly. Okay. Yes. Okay. So the day when I know Sam, my size was double my size, and I've got a lot less hair. So thank God I'm different right now. Okay. So anyway, Sam, can you just take a little bit of basic? I've always teach everybody, if you want to grow rich, there's a lot of ways, but a lot of people like investing in two things in Singapore. Number one, they like to buy property. Okay, I have nothing against that, right? They like property, and then number two is they like to buy Singapore stocks. They like buy stocks like Facebook, Google, Amazon, whatsoever, Tesla. Okay, China stock,
REITs.
and they like buy REITs, get a lot of dividends. They like buy, sell, buy, sell, buy, sell, buy, sell. Right? The method that I've been sharing with everybody is I buy an S&P 500, okay, and I leave it there forever, right? Forever, 10, 20, 30 years, okay. A lot of critiques to this, okay. Now and I tell people, all the other investment method, yes, you can make money, but you need to be damn good, okay. So this is a guru. He used to be a CEO of Morgan Stanley, right? Morgan Stanley investment management, right? He's got to be the best, right? So maybe you can share with people whether my investment theory, what do you think about it yourself?
Yeah, thank you, Lou, and thanks everybody for joining us today. As Lou said, we've been friends for a long time. He's been such a great supporter of ours, and he's been so helpful. We've been on this journey together, investing, and I have to say that even though I was a professional investor investing, billions and tens of billions with Morgan Stanley, it doesn't matter. A lot of people, work very professionally in investing, but when it comes to investing investing your own money, they don't always do what they preach, and that's a problem. And so when I was younger, I would make those mistakes more. As I grew older and wiser, I think I've been able to manage my finances better. And one of the reasons Endowus was created was because we wanted to help individual investors. So when you're a big, company like GIC, or if you're at Morgan Stanley, you get the benefit, a lot of advice, a lot of access to great products at low cost, and everything is made up for you, so you don't have to focus on anything other than making good investment decisions, and that's why you do well. But as an individual investor here in Singapore, and it's not just Singapore, Hong Kong, anywhere else, it's very difficult to invest because we don't get good advice, we don't get access to the best products. So stuff like the Amundi fund that we're here to talk about as well, that's helping solve individuals' problems in accessing great products. Yeah. And then the most important thing is cost, lowering costs of investment is absolutely essential, because every fee that you pay is taken away from your returns. And traditionally, banks and brokers and these fund platforms as well, they talk about no sales charges and low fees, but it's just too much. I think for individuals, especially even for CPF investing, it was very, very high before Endowus came along, and we've lowered costs to a third or half of the cost that it used to be. So lowering costs is absolutely essential.
But why not buy Tesla? Why not buy Microsoft? Why buy Facebook? Why not invest in condominium in I don't know, in Pasir Ris or Orchard or whatsoever? But why put money in in S&P 500 or Endowus or whatever?
Yeah, and it's a good point. And investing in stocks is not a bad thing. But the problem is this phrase, putting all our eggs in one basket, right? What that means is that we're investing a lot of money, a big sum of our savings, into a very small thing. And if that goes wrong, then your future is going to be not good, right? And especially these days, you see Silicon Valley Bank. A lot of you might have heard of it. A US bank went bankrupt, collapsed. and lost a lot of money. Deposits, bank deposits, which are supposed to be safe, were lost. And then Signature Bank and then Credit Suisse all went kind of under. UBS had to bail out, and the Swiss government had to bail out Credit Suisse. What that means is that if you had put all your eggs in that one bank, like even Credit Suisse, which is a very reputable, famous bank, you invest all your money in Credit Suisse stock, thinking, oh, this has been around for 200 years. It's a great company. It's a Swiss company. How can you lose money on this? But you lost 90-something% on that investment. And then it's very difficult to recover from a 98% loss, right?
No
because
chance.
even if you double your money from 2 cents
No
to 4
chance.
cents, you're still down 96%.
Yeah.
So it's impossible to recover from a blow up. And so as an individual investor, where you are investing for your future and investing with very, very important like savings that you've worked so hard to, gather, you need to manage the risk you're taking. So you need to take the benefit of a lot of wisdom that has been gathered in the markets over history, things like diversification. So diversification means that you're not taking all your risk in one stock, and not even one country or one sector. You're diversifying that across various different companies, because there are a lot of great companies out there. You diversify across different geographies, because sometimes US does well. Sometimes, look, China's recovering, or Latin America's coming back. You want to be exposed to all of the growth around the world, and then all the different factors. For example, sometimes growth does well, technology does well, sometimes value does well, and banks outperform. But if you diversify yourself and you own an S&P 500 or a global market index, then you're going to compound returns steadily without a lot of volatility, without risking your money going down to zero.
How many percent a year?
Maybe long-term markets in S&P 500, MSCI, ACWI has generated at least 7%, if not at certain points in cycle, almost 10% over a decade or so. So 7 to 10% is actually a really good number. And if you compound that, remember the rule of 72? If you generate just 7.2% over 10 years, you double your money. Or you generate 10% over 7.7 years, then that's doubling of money.
Okay.
How great is that? Doubling your money every 7 to 10
But
years.
if I invest in my money in an Orchard Road
Yes.
house, I would have made the same amount as well.
Yeah, no, that's not true.
That's not true? Yeah.
If you look at the statistics, it feels like you've done really well. But obviously, the headline numbers on returns, if you compound, not just one single property again, because you wouldn't have owned that particular property that went up the most. If you just do a general consensus real estate return, it's actually been less than 5%. Or compounded over many decades, that's a great return too. Some of them are as low as 3%. So
not Mr. Lu say, for those people who are property sell, okay, not Mr. Lu say, now experts say, okay, so don't say Mr. Lu don't know shit about property, okay. Now it's experts say, okay. So I just want,
But there's another important point though.
Yep.
Because markets tend to have some cycles, but overall they continue to generate that 7-10% over the long term.
Yep.
Property, it depends on the cycle. Like if you went in early, like you owned a landed property, in like 20 years ago, then it's been amazing.
Yeah.
But what about the future?
Yeah.
Right?
Yeah.
Great companies will continue to generate returns because consumers will use great products and use great companies, and they'll earn great earnings.
Yeah.
But property, we don't know what the future will hold because we're at such a high price. And it cannot continue to go up.
But everybody believes that Singapore property will never crash, will continue to rise forever. You know?
Can it? That's the point. It's not going to crash. Maybe it probably won't. It's a great investment to a store of value. I don't deny that, especially versus other markets like Hong Kong or other countries. But is it going to be able to generate consistently the 3-5% returns that it has in the past? That's a question that you need to ask. And not every property will do well.
Okay.
Yeah.
Right,
so there's a scarcity value, there's a demand and supply to every property, every segment of the property, and you need to be in the right segment to generate those returns.
Okay. First of all, thanks for this great answer. But hello, YouTube, okay? Nobody give a like. Apa ini, what's this? I got guests here. Maybe lau kui, understand? I invited.
90 likes.
It's not enough.
Not enough.
It's not
500
enough.
people
Hello,
and 90 likes.
can you all like give me? Hey, hello. Do you know how difficult it is to invite him? He's like Yeah, and atas. You think like low class handbag roadside seller like me, is it? Okay, so can you please, give respect, give a like, please. Thank you, thank you, thank you. Okay, yes, thank you. All right. Thank you, everybody on Facebook as well. So now I want to ask now. Okay, now the one that I always love, I love the S&P 500. I've invested so much into the Lion Global S&P 500 fund. Okay. But recently there's this fund called Amundi that just came out, and I know you talk about it. We talked about it and prepare ourselves for a long time. The last time we did it was like 1 year ago, right? You all took quite a long time, but now it is ready. It's CPF investable, SRS investable, cash investable. Everybody is asking why should we or should we not invest in the Amundi, and what other options are there, and so on, right? Your Endowus. If you look at your website, wow, so many funds, how on earth an average person, it's like you go McDonald's, right? Wow, got so many choices, but in the end you say cheeseburger, right? So can you please tell us now why, we should invest in Amundi, or what other funds you have? MSCI World Index, you have got just what Blackrock, don't know what, so many, right?
Yep.
All right, please tell us why should we go for Amundi? Is it better? Yes.
So first of all, I'd like to point out that in the world of finance before Endowus, there were two choices. One was the fund platforms like Fund Supermarket, DollarDex, and who's the other one? Poems, right? These kind of digital platforms that talk about low fees, and they have thousands of funds.
Oh no.
That's like too much.
Yeah.
And we know from investing that too much choice is actually a bad thing for individuals. That's why Premium Mall selects the best products and put it to you. And Endowus selects the best investment funds and present it to you.
So you must buy from Premium Mall.
And Endowus.
Endowus.
So
Endowus for
only
sure.
200 funds out of the
200 is
thousands.
still a lot, man.
Still a lot.
How do you choose, man?
But we choose only the best funds for each sector, each country, each choice, right? So I have to tell a story.
Yeah.
You know this story, Lou, but in 2017 when we started, we wanted to help individuals, especially CPF members, start investing well.
Yeah.
Right? The cost of investing in CPF was like 5-6%. It was ridiculous.
Crazy, man.
Crazy. There's no way you can make money if you pay those
almost
fees.
close to cheating, really. Yeah.
It's criminal.
Okay. Yeah. Criminal.
Yeah. But we lowered it to less than 1%. And one of the most important things we said was we needed to do was introduce low-cost passive index funds. And
can you explain what is low-cost passive index funds?
It's exactly what it says.
Yeah.
But it's low cost.
Yeah.
Second thing is passive means you don't have to do anything.
Yeah.
You just follow the benchmark index and follow the market instead of choosing stocks or trying to make active allocation. You just be passive. And the final thing is you're following an index like S&P 500 or the MSCI or Country World Index. So low cost passive index funds. And they're available in the US and developed markets at low cost, but at the time in CPF, there were none. There were none available.
Why?
Because fund managers at the time were trying to...
Suck blood.
You said it, not me.
Yeah, suck blood. Yeah. That's why all the fund managers so rich. That's why this fund manager so poor. Look at him, the way he wear. Yeah. Okay.
No.
Yeah.
I think a lot of good fund managers out there, but it's very difficult to have a low cost index fund in a relatively small market like Singapore or Hong Kong. In the US where there's hundreds of trillions of dollars, you can launch a fund and get it to billions. But in Singapore, the market was too small. But also more importantly, the banks had a stranglehold on the distribution of funds. And it was very difficult for fund managers to launch low-cost funds. So it's a chicken and egg thing. They want to do it, but they didn't feel there was demand, especially in CPF. And then, the people that wanted it, didn't have the option to. So they didn't put money into it and bought these other more expensive and most often not very good mutual funds, which underperformed. So we worked really hard with Lion Global at the time to introduce the lowest cost passive index fund, the first passive index funds in CPF, back in 2017 when we launched the CPF service. Yeah, back in 2017.
And was one your first customer?
First customer, and before you were paying how much? You were paying I think 70 basis points for that same fund. Same fund, 0.7%. Now it was down to 0.34% with Endowus. So Lou immediately moved it over and invested ever since and have done very well. But we knew there were better options out there. So we went to Amundi and Blackrock Two, the BlackRock is the biggest US and global fund manager, biggest passive index fund manufacturer. They have a series called iShares that many of you might know. And then Amundi is the biggest European fund manager.
I never heard of Amundi.
Amundi
It
is
sounds like
big.
some Indian fund, or Papua New Guinea fund. I never heard of it before.
Yeah, it's actually owned by Credit Agricole.
How big are they?
Oh, they're huge, trillion, like $2 trillion of assets.
Trillion?
Yeah.
Wow, that's more than Singapore's. That's more than Singapore's national reserve.
So BlackRock is huge at 9 trillion. They're number one. Amundi is, I think, definitely top 10.
Yeah, someone said, sounds like Indian Amundi, right? You also agree, right? I also never heard of it before. 2 trillion.
Yeah.
How long have they been around?
They've been around forever. They've been around for a long time. So they're owned by the two of the biggest banks in France. So it's a French company by Credit Agricole. So Credit Agricole consolidated the industry, brought a few fund managers together, and Amundi came into being.
So they won't
changed the
collapse,
name.
right?
It used to be Credit Agricole Asset Management, and then they changed the name to Amundi.
Full name. Must come and look for Mr. Lu. The word Amundi sounds so terrible.
Yeah.
Okay, yeah, but okay, so...
I'll let them know, but Amundi is a very well-known brand, and it's a very good,
how
good
stable
company.
is Amundi,
Oh, very stable. I mean, it's bigger. It's actually bigger than Morgan Stanley Investment Management that I used to work for. Morgan Stanley Investment Management is only 1 point something trillion. Amundi is much bigger than that. So very safe, very big, the biggest European fund manager and one of the biggest globally. So very, very safe fund manager, Amundi. So they will be, so they were the ones that helped us bring in the lowest cost fund. So this fund, Amundi US Index Fund, 0.05%.
It's almost free, man.
It's almost free. 0.05%.
How do they make money?
It's the lowest cost of any fund that ever existed in Singapore. Did you know that?
0.05%
for the fund.
It's almost free.
It's almost free.
Yeah.
It absolutely is. There's no fund cheaper in all of Singapore.
Then what do you all make?
So they charge 0.05.
Yeah.
We charge a fee on top of that.
How much?
Well, 0.3%.
So it's
So it's
combined?
still cheaper combined than the Line Global or any fund that's
What's the
out there.
combined life global right now?
0.65.
So with Amundi, you
We've
will
taken
be
that
half.
almost half, basically. So that's the first thing. The second thing is BlackRock iShares.
Okay.
So BlackRock, we also work very well with them.
Blackrock, I've heard before.
BlackRock, you've heard of.
Yeah.
Most of you guys probably have heard of.
See, branding is so important.
Branding is
the
so
name.
important. Yes.
Yeah, Amundi is terrible. Okay, anyway.
No,
Yeah.
Amundi is a great
It sounds like
brand.
some Indian Papua New Guinea brand.
It's a good.
Yeah.
Amundi is a good brand too.
It's awful name. Okay, but anyway.
Anyway,
so go on.
so Amundi and BlackRock, both of them, we launched the BlackRock iShares series of passive index funds at 0.08%, 0.1%. So the lowest cost that you can get access to in Singapore. And the most important thing here is that it's exclusive to Endowus. Amundi came and wanted to do things with CPF and launched this fund into CPF, and nobody else actually wanted the fund because the banks want to charge a lot of fees on top, and if it's so low cost, there's no way of charging.
So we cannot bypass you and go straight to Amundi, right?
No, cannot.
Okay.
Yeah. So because we're the ones that brought them into Singapore, and we moved assets into, we promised them to move assets into that company, into that fund, so that we can scale it and bring cost even lower. And BlackRock, the same thing. We worked with them to bring that into Singapore. So Amundi is the only US index fund, the lowest cost fund ever to exist in Singapore. And we had it for since last year, as Lou said. But last month, we finally got it into CPF.
So Amundi versus Lion versus, okay, how does Amundi, apart from cost wise, but the performance wise, right? Are they like also a S&P 500 clone? Do they mirror S&P 500?
Yes.
How different are they? Whatever performance wise, is there any difference?
Yes. So all three funds, the Line Global, the Amundi, and the BlackRock, all mimic the US top 500 companies, S&P 500. The reason BlackRock and Amundi, there's a difference in fees is because Amundi does not use the S&P 500 index. It uses a selective index that is lower cost, which brings costs that low.
But what if their performance is not like S&P 500.
Yeah, but if you look at the performance, there's two things that in a low-cost passive index strategy, there's two things we look at. One is the actual performance, and then the other one is the tracking error. So every day, how much does it deviate from the underlying index, which is S&P 500 or the selective US index? And the deviation is very, very low. So effectively, if you look at it long term, like even short term, a few months to one year to 2 years, there are periods where it outperforms slightly or underperforms slightly, but largely it will be the same as the index return, and it's very similar to the S&P 500.
So bottom line is, does it or does it not mirrors the S&P 500?
It does, absolutely.
So it's
and
S-
so,
so it's
99% correlation means almost the same.
Okay.
And the most important thing, because it's not an active fund but a passive fund, and it's an index fund, so S&P 500 or whatever the strategy is, we also have great MSCI World Index Fund at 10 basis points, which is great because it gives you diversification. For example,
Sure.
Europe started outperforming recently, right?
Sure.
It did really well. It also has Europe or Japan. So it gives you a bit more diversification into developed markets as a whole instead of just the US.
Yeah.
And those have done really well, and those also are available with Amundi and Blackrock. So the Blackrock funds are even better, guys.
Guys, one of your please.
Even better because the Blackrock fund is an iShares. The fund gives you. Yeah, go down. Come down. Come down.
Come here.
Yeah. So the Blackrock funds Blackrock funds is a replication by synthetic futures, and so what that means is that a lot of U.S. funds have a lot of tax. So there's a withholding tax for foreigners investing in the US of 30%. Now all funds pay 30%.
On the dividend.
On the dividends paid out.
Okay.
So if S&P 500 pays out 2% dividend, 30% fee tax means 0.6% fee. So you might have generated 5% or 10%, but you lost 0.6% on just the taxes.
But how much dividends does S&P 500 give you?
Roughly just under 2%. So I'm
2%.
rounding it up to 2%.
So 2/3 of it go away, you're left with about 1.5.
1.4.
1.4%.
So 0.6, if you think about the fact that the management fee is 0.6, Endowus fee is 0.3. 0.6 is like twice the Endowus fees for nothing. There's no reason to pay for it. But because the US system is such, we can't avoid it. But there is historically been one way, which is accessing the European Irish UCITS funds, UCITS, UCITS funds, which have a 50% discount on withholding tax. So you only pay 15%, 15%. But the Blackrock iShares is even better because you use a synthetic structure of mini futures, you actually don't pay a single cent of tax. So you're saving 0.6% on top.
Totally. Wait, I wasn't paying attention. There's too many pretty girls here and my wife is here. But I didn't hear that. Okay, wait, very important.
They all heard.
Okay, very important.
Yeah.
Lion Global, which is what I'm investing now, I got withholding tax of 30%.
Yep.
Basket, I didn't know. Okay, never mind. Then Amundi,
Amundi is the same because
30% withholding tax, okay? And then now BlackRock iShare has
0.
kosong.
Yeah.
Okay.
So some people mentioned the IVV and some of the US listed ETFs and then the UCITS European listed UCITS ETFs. So a lot of people buy the UCITS ETFs because they say, 15% tax and therefore more efficient. This BlackRock iShares Index Fund is lower cost, is 0.08%, and also pays no withholding tax, 0. And therefore, it's been able to generate better returns than any of the other ETFs.
And you're mentioning what synthetic what?
So basically, you can
in
buy
English.
In English, when you say that you're buying the index, you S&P 500. There is no index that you buy.
Yeah.
When you're buying the index, you buy 500 companies that make up the index.
Correct.
But in the US, they have a futures market.
You buy the futures
derivatives.
index. Okay.
And the futures market, actually, you can buy the single futures.
Sure.
And that futures is going to replicate the return, exactly mimic the return of the S&P 500.
How dangerous is this?
It's not dangerous at all.
Okay.
Yeah, there's no risk. And Blackrock is, as I told you, $9 trillion asset manager. They've been running this iShares ETF, index fund for a very long time.
Is it a leverage?
No leverage.
Okay.
No leverage. It's counterparty. It's secure. There's no risk at all, and it's been running for a long time. Billions of assets under it. It's the way they manage it because it's most efficient, and they actually even are able to generate better than index returns sometimes because of these reasons.
I see. Okay.
But the BlackRock iShares is not available for CPF, and that's why the Amundi is so attractive for CPF, because for Amundi, the Line Global fee was higher, and therefore lowering the fees by 0.3% is going to really, really help you generate better returns over the long term because of the compounding effect of lower costs.
So are you referring to Endowus iShare US Index Fund?
That's right.
That's a fund.
Yes.
But unfortunately, cannot use
Not
CPF.
for CPF.
But SRS okay.
SRS okay.
Okay.
And cash.
And cash.
Yes.
All right. Cool. Okay.
Hey Jackie.
So what's the downside?
There's no downside.
There's downside just together with the volatility
It's the
of
market.
S&P 500,
Yeah.
right?
So
Okay.
it doesn't matter whether you buy S&P 500, MSCI World Index. These are all ways to have exposure to broad markets who have generated markets that have returned 7 to 10% over the long term. And the most important thing for a passive index fund is cost. For active funds, you need to find the best fund manager because there are good fund managers and bad fund managers. Most of them underperform. Some of them outperform.
I don't believe in active
Yeah.
fund managers.
He doesn't believe in active fund managers,
don't
but there are good fund
Yeah, I
managers
know.
out there. There's some good hedge funds, but most of them underperform. Last
Yeah.
year, I think 90% underperformed in the global funds. But if you buy index fund, you don't have to worry about which fund manager. It doesn't matter whether it's Line Global or Amundi or Blackrock. You need to get the lowest cost because
Okay.
it's replicating almost the exact same index.
I see. Okay. So now we have three options. Lion Global, which I think
I don't know.
100% of my shares out of my money and Endowus is inside. Okay. And then we have got Amundi.
Which
and
you now need to shift over to
Yeah. And then now I've got iShares as well, right?
for your cash and SRS.
Cash and SRS. Okay. So among all these three, looks like the one that's most costly is Lion Global, which now we're left with two options. Amundi or SRS. Clearly, Amundi is for CPF, and for non-CPF, we can consider iShares. I see.
Yeah.
Okay. Yeah. So maybe we start a bit of Q&A right now because I think this is the main message. Okay. And there are like a gazillion questions right now. Okay.
There's so many on
Gazillion,
Yeah.
and I know we haven't.
So there was
answered-
one question on the fees, and I said, I think that, look, I mean, Endowus charges the lowest fees in the industry. Even Fund Supermart charges more fees than us. They also take trailer fees that you don't know about, but it's the commissions that fund managers pay the Dollar Decks and Fund Supermart and Poems and those platforms that talk about zero sales charge. But Endowus has never charged sales charges. The commissions that you pay, they're called trailer fees and retrocession fees that are hidden, taken from your fund and then paid to the distributor, like Fund Supermart, Dollar Decks, or DBS or other banks and brokers. We receive that and we give 100% cash back to our clients. So we've returned in cash more than $6 million already. We've only been around for 3+ years since we launched CPF, and we have returned more money than the revenue we generate in 1 year. So we're giving back more to our customers than what we're keeping. I think that's the most important thing. We have had a very high level of integrity. We are leading the charge in independent, fee-only, conflict-free investing. And so we want to tell you that our fees are very, very low, and it's barely enough for us to survive with these clothes. and
I've been
basically
trying to
it's the
sell
lowest
this
than-
kind of thing to him. He cannot buy. Cannot afford.
I can't afford this.
Okay. I need you to have short answers because there are
Yes.
like gazillion questions, like thousands of
Go.
questions right now. Okay, I'll just go straight to those questions. Okay, number one question is that how do we switch from Amundi how do we switch from Lion Global or whatever funds we have into Amundi? Is it a
So
phone call,
you can do it.
app,
You can
or-
do it on the app.
Okay.
Everybody on the app should be able to sell and buy. You can do a transfer goal. So you create a new goal with the Amundi or the Blackrock if it's for cash and SRS, and just switch it over. We will sell it, and then it will settle, and then you will buy it. So it will automatically be done for you.
How long does it take the transfer?
So normally these transactions take T+1 or T+2. So mostly T+1, and therefore that it will settle about.
Modify goal.
Huh?
The term is modify goal.
Modify goal, yeah,
What is
sorry,
that?
not transfer goal. Modify goal.
No. How?
Yeah.
Can like, you need to understand. Uncle, auntie like us cannot understand. I bet you I go. I hand my app over to my wife she will tremble, right, B? Right, you tremble. It's like, where? What? Don't even know. First of all, even the login is frightening. Then after that, where to press? Like, how to do it? Right? Is there a video we can look at or something like that?
Yeah, so go to the website. We've given you details of how to do that in Modify Goal. In the webinar that we did when we launched the funds, we're gonna do another one this next week. So the Blackrock CEO and the Blackrock head of used to be the head of iShares, managing director, will be joining me on a call on Blackrock. And then Amundi one we did last 2 weeks ago. It's in the Endowus YouTube channel, so you can go and look. But you can reach out to support@endowus.com. We'll talk you through it.
Support at endowus.com. Everybody, Endowus, support@endowus.com. You see, Peggy say, yes, I'm in the generation of Mr. Lu. I kid you not. I know your struggle, okay? Like, I was like, ipat you want, but what but ipat what? The kind of things like, I cannot recognize this thing, the ad here, press that, don't know where to go, right?
No, but the app is very simple. It's upgraded, it's improving, so it is very simple. You go in and you can do it very quickly.
You know what?
But if you need help, as I said, you reach out to support@endowus.com, and we will help you to modify your goal from your old one to the new one. Monthly lump sum, regular savings plan, all available. Jackie, your question, withholding tax is Amundi. There's no way of avoiding withholding tax. Only the Blackrock avoids withholding tax. And then the estate tax issue is not a problem because these are funds that we brought into Singapore and locally registered, MAS registered. So it's a local Singapore fund denominated in Sing dollars, so you don't have to do FX, additional cost. If you do UCITS or US, you always charge these very high FX spread. Oh, the other thing you don't know, Lou, we launched the FX. Now you can have
Wait.
FX here. So one at a time.
Yeah,
lowest
one at a time.
Lowest cost FX in Singapore on Endowus.
Okay, wait. I'm now in my app. Okay, I'm gonna do it live right now. Okay. I'm gonna transfer to Amundi right now. Okay. I'm gonna.
Okay, let's do it.
Okay, I'm gonna do it right now.
Can you show?
Yeah.
Show?
Can see?
Yeah,
Can see?
can see now,
Can
yeah.
see, right? Okay. I'm not shy. I got 690,000, of which $90,000 is profit now. Okay, 90,000 is profit. Okay, can you see? I don't think you all can see. Okay, I'm not trying to show off. Okay, I'm just trying to help. Why does this keep going to this shit? Okay. All right, cool. Okay, I'm going to show you all how to do it because I also don't know how to do it. Okay, so where? I press which one?
No, you go into your goal first, which is this one. It's a CPF one. This one.
Okay.
Go in there.
Yep. I got a feeling you also don't know, but let's
I
try.
also don't know.
Anyone of you
Hey,
know?
Where's the modify goal button?
Yeah, I knew this is gonna happen. Okay.
Hey, transfer. No, this one.
No worries.
Shang-Chi,
Yeah.
this is Shang-Chi.
Hi,
Everybody.
He's in the
Those of you
Telegram.
165, everybody knows.
Yep.
Okay, so you click onto the goal.
Wait,
No, show him the goal first.
Uncle
Yeah,
me
go.
cannot see.
Okay, when you log in, this is the main screen.
So
No,
this
that's
is where
not the
we
main
were.
screen.
This is where we were.
Yeah, this is the main screen.
Scroll up
Okay.
to show the actual goal.
You go to the goal. You click
Click
onto
it.
the goal.
You click the fun.
Okay,
okay.
The goal or the fund, right? You click onto the top
The
right
three button.
corner at the three button,
Okay.
and then there's basically the modify goal.
Modify goal. Okay.
Yep. And
And
then
then my butt you want to drop already. Okay. And then.
yes.
Go closer, otherwise they cannot.
No. You
Okay,
gotta pull back. You gotta pull back. It's too bright.
Okay,
It's too bright. It's too bright. It's too
Lower the
bright.
brightness.
It's too bright. It's too bright. It's way too bright.
Yeah.
Okay.
Okay.
Then?
Right. So under the fund selection,
Yeah.
you would have to choose the Amundi Prime.
Okay.
So
Yes.
you put in the plus button,
Yeah.
then go next,
Yes.
right? And then go to the fund allocation.
Yeah.
So you would change Amundi to
100%.
100%,
Hey, I don't go 100% so fast.
No.
Then
How much you wanna
0%.
Okay,
right. So basically, what we'll do is that we'll sell off your Lion Global, and then we'll buy the Amundi Prime
How
Fund.
much you want to do? 25%?
Okay, let's do 50% first.
50%. Okay.
Okay, so 50%, which means that we'll sell off 50% of the Lion Global Fund, and then we'll take the proceeds and buy the Amundi Fund.
Okay, and then done.
Okay, then
Next.
where's next? Then next.
Okay,
Yeah, I think you have to leave.
Right.
Yeah, that's it.
and then click confirm.
Yes, then you read through the details of the new portfolio that you have created, and then
Okay.
you click confirm.
Wait, does it cost me money to do this change?
Nope, not at all.
Okay.
No cost involved,
Okay,
no
click
fees,
accept.
no penalties, no charges.
That's it.
No, there's some.
S&P.
No, there's a
OTP.
OTP, right? So anything before OTP, you are safe. Don't be worried about making any
Okay,
mistakes, right?
OTP done. Wait. OTP done. Go modification in progress.
Done.
How many of you think you can do it by yourself? Very difficult. I tell you guys, interface is quite easy and Endowus, but you may consider using bigger icon. No lie, it's very difficult. You know what, Ashley, I don't know. I think it's very difficult for uncle and auntie like me to know. Who agree with me it's very difficult?
Okay, Lou, it is difficult. I agree. Not
If
easy.
someone say very easy, someone say blur.
No, not easy, but the
I
problem
scared,
is,
you see?
Yeah, Peggy's scared, I think.
I also
Your
scared.
our generation, and
Yeah.
so a little bit scared. But I think it's also because we've maybe not been as accustomed to digital usage, right?
Huh?
Because before you had to go to a bank. Imagine going to a bank to just do that. Like before, Lou just did it in like 1 minute. Sheng help.
Okay.
But before that, you had to go to a bank, take a queue.
Of course,
Imagine
of
being
course,
at a
of course.
DBS, trying
course,
to,
of course.
or on Fun Supermart where you don't know where to find anything on the
Yeah.
web, right?
Okay. In all fairness, I think that 90% of people say it's actually quite easy. So it's just
We just
me.
showed how easy
So
it
it's
is.
just me, Uncle Lou here, dumb, and I bet
Not
you
dumb,
if B
not
were to
dumb.
do it, she would tremble also,
I
right,
think
B?
B would do it much better than you.
Yeah.
B would learn it much faster. Lou always talks about this, but it's so easy.
Show us you change to China fund. Later, I don't want to change China. I only want Amundi. I don't want any other thing, okay? Okay.
And then the SRS you need to change to Blackrock, right?
Okay.
Yeah.
Mr. Lu, do you into iShare? The one iShare, I haven't looked at it. Amundi, I kind of
I
convinced.
tell you, you change your SRS. To
Okay
Blackrock.
lah,
Done.
做好了看了. Okay, wait.
Zero withholding tax.
Wait, I do it myself.
Right,
myself.
the reason is because I worked so hard. The whole team at Endowus worked so hard for many months to make this happen.
100,000 baht. No. Wait.
No. This one.
Okay.
Click the goal.
So I got SRS inside. So I show you Okay.
Click.
I try myself SRS. I click.
And then top button.
Wait.
What is it?
Okay. Say invest in this goal. Is it?
No. Top. Remember what was the
What
top
top?
one?
Oh,
I
the
didn't
top.
see. Sheng-Shi,
the-
are you watching?
Three.
Yeah, that one.
Modify goal.
Yeah.
Okay.
And then.
Then one fund, is it?
Yeah.
One fund. Wapiang.
Blackrock.
I got a lot of Blackrock.
Yeah.
Blackrock.
Let's type it. Can you type?
I cannot
Not
be.
working.
Wait.
Yeah. iShares.
BLA.
No. Blackrock. Just type iShares US.
iShares.
Yeah.
Shares.
Right at the top. US index.
iShares US Index Fund. Sorry. Okay. I don't.
Yeah.
Okay.
Oh, plus.
A plus.
Yeah.
How I know when to press? Okay.
Done.
Then
Next
what's the
step.
next two funds?
Huh?
That's correct.
Oh, that's correct.
Why?
Yeah, because you have the existing one.
Okay.
Yeah, yeah.
Here.
And then
Then
fund allocation, bottom one.
fund allocation.
Yeah.
Then I put 50%.
No, this one's black line 0.
What
Line
piang?
0. And then this one, you just click it.
No, I want
Yeah,
50% in
50%.
right now.
Yep, that's
No fees, right?
No fees.
Okay, try first so I can 50-50.
Sure.
Okay.
Yep.
Then click next. Right? Then I
Next.
click next.
That's it. OTP. Next,
Okay.
you choose
Confirm.
the details.
What is this? Accept and confirm. Wait, OTP you all cannot see.
Yeah.
Okay, OTP done. Okay, OTP rule. Okay. OTP done. Go modification progress. It's quite tough.
Not
Okay.
tough.
It's
How's
damn
that
tough.
tough? How's
It's
that?
damn tough.
It's
is
easier
there-
than anything anybody else can do. No one else can do this.
It's quite tough. It's quite tough. Yeah, it's quite tough for me. It's quite tough. Okay. Okay,
You
but
need
but
to-
okay. Wait, uncle me a little bit old generation. Okay. Okay. So okay. So so Mr. Lu
Start
can
from
do a
people.
step-by-step demo for us via a video. We can watch replay. That's what I did just now for you guys. Okay.
Yeah.
Yeah. Hey, hello. I
We'll
spent
create a video and put it
I
on your
spent
YouTube.
nearly a few $100,000. I move a few $100,000 for you guys to see. Okay. Yeah. Okay. Jackie, you techie. You don't say. Okay. Yes, I know you techie. Hello, Aceh here. Like me, 50 years old. The brain. Only know how to eat chicken rice and
I think
char kway
Jackie's
teow.
older than you.
Yeah. Okay, anyway. No, Jackie is techie
No, just
lah. I know him, he's very techie one, okay? Okay, sorry. Okay, now we know how to do it, okay? So cannot allocate 100% to Amundi. Someone said 2% said.
Huh?
2% say cannot allocate 100% Amundi, is it?
It prompted
Can't be,
fund cannot have zero
Okay.
allocation.
No, Kenu is in Europe. Okay. So okay now okay so okay now I've seen people done it. I've done it myself, and now I know. Okay. So for those people who are like me, got technophobia, okay, watch this video again. And if still cannot, what support at
Support@endowus.com.
Endowus.com. Okay.
Because
For
we
those
are here to support you.
yeah, there are pretty girls and handsome men here. They will help you. Okay. Yes. All right. Good. Okay. Okay. So this one is I think. Okay. I think. Sir, you need.
No,
Okay.
it says you can delete the
Eh.
previous fund.
Yeah.
You can delete
Okay.
the old fund and then allocate 100%.
Okay. Now next question, please. Okay. I try to get my question. Okay. Yes. Okay.
You should just unlock so it doesn't freeze.
I have changed from Line Global 500 Amundi for my SRS. Why need to change it to Blackrock iShare? He just explained. Blackrock
Amundi
iShare.
for CPF, Blackrock for cash SRS, because 30% withholding tax goes to zero, you save 0.6%, 0.5, 0.6% on your return every year.
Okay, someone asked, which is a stupid question, but someone asked, sorry, I shouldn't say that, that's terrible. Okay, forgive me, okay?
Okay, there's a
Yeah,
dimension question.
Okay, yeah, another question was dimension fund, dimensional fund versus all the other fund you're selling. I also got dimensional, no?
Yes.
Yeah, okay,
Yeah.
I also got dimensional. Why not dimensional?
Dimensional is great. Dimensional is great, especially.
Do you have
because
dimensional?
I have dimensional, and the reason is because dimensional is a very, very intelligent people, very atas, more than me, and they basically are going through history and looking at what drives markets and what are the characteristics of companies that generate better returns over time, and those are value, which is valuation, and the second thing is size of the company. So small companies over long term does better, obviously, because you catch them early. And then the third one is profitability. So more profitable companies do better. These are all very logical things, and so they make a portfolio that is passive. So it's very passive and indexed, but they tilt it. So they own like 10,000 companies, so very diversified, but it gives you exposure to the factors of proven returns over long time periods, such as value and small and profitability. And so there are periods in the cycle where growth does well. Like the last decade, technology did very well, S&P 500 did well. But last 2 years, value actually started outperforming. And
Which is dimensional.
Which is dimensional. And
Okay.
I think that they will have a decade of outperformance most likely, because it goes through like decade cycles. Remember, I've shared this before, and I've told Lou this as well, but after the global technology bubble burst in 1999, the tech bubble burst, from 2000 to for the next decade, for 10 years, the S&P 500 underperformed everything. So there is periods where S&P 500 can underperform. Any index can underperform. If you own only a small piece, it's not a small piece. US is the biggest piece, and US S&P 500, has companies that are exposure to globally, but it's still a US exposure. So when Europe outperforms, emerging market outperforms, Japan outperforms, US cannot outperform. It can only do underperform. So basically, there is a period, especially, it's very similar because technology outperformed in the 90s and then blew up. technology outperformed in the last decade, and it's kind of blew up last year. It's kind of very similar stage, but S&P 500 is very different from back then, where a lot of technology and only technology at really extreme valuations existed. This time, S&P 500 is a little bit more diversified, but it doesn't have Europe, it doesn't have emerging markets. And right now, after a decade of underperformance in emerging markets, decade of underperformance of value, there is a probability that these things come back. And that's why we say diversify yourself. There's a lot of questions about the Endowus flagship, having MSCI Acqui instead, and then dimensional. All of these options are given to you so that you can have exposure that is very diversified, very global, and we try to give it to you at the lowest cost possible, much, much lower than anybody else.
I see.
And then give you advice like this along the way so that you can understand why we're doing it, and why you need to keep investing, and what are the better options out there.
So there's a question on estate duties. Only recently I found that if I own individual US stocks, 1/3 of it will go to US government.
Yeah. Not only US stocks, but US ETFs as well.
Yeah.
So because US ETFs means that it's a fund that is listed on the stock exchange, so it's treated like a stock.
So
Yeah.
question right now is, does all your funds will we hit with estate duties?
Yeah, so that's one of the reasons why a lot of people ask us, why don't you do ETF, US ETF, like Stashaway Site, all these guys use US ETFs. A lot of robos or banks that they sell US ETFs. Like a lot of broker, Mumu, Tiger, IBKR, all ETFs. Everyone's using ETFs, and we say no, because ETFs are costly. If you're investing from Singapore, and dangerous because one, it has withholding tax. Two, you have FX cost. Every time you buy, you have to exchange the US dollars, and then when you convert back, the banks and brokers take a huge spread.
But don't you also have exchange costs?
Zero exchange cost.
What do you mean? How do you achieve that?
So there's two ways. One, on the platform, we take zero spread on any FX conversion. So I told you on the app now, we are the cheapest way to transfer FX from US dollar to Sing dollars or Swiss or Euro. We have 6 major currencies that we have an FX function. We take the wholesale rate, 3 pips. 3 pips is 0.0001. 0.0001%. 3 pips instead of the
What is
0.003% that many people will charge.
I
so
see.
Nothing basically. Almost free. And because we're not doing FX for the sake of FX, we don't take any spread. We don't take anything.
So you don't make money out.
We don't make any money
exchange.
from exchange.
Yeah. And other company does that?
Every company does that. Banks do that. Brokers do that. Even the robo advisors do that.
How can
All of
they,
them do
man?
that.
Yeah.
But it's just the norm, and
It's
that's
the norm?
the difference between Endowus and everybody else. Is we try to think about how can we do things differently.
I
How
see.
can we help the individual do better? And FX is one function where we felt we need to provide a function where FX can be. So you can buy a US dollar fund, or a Swiss franc fund, or a Euro dollar fund, or Aussie dollar fund, or GBP fund on the Endowus platform now. We have multi-currency capabilities at the lowest cost of FX. And that's really important, like again, lowering costs. So going back to the US ETFs is withholding tax, there's FX cost, but a lot of people don't know, as you mentioned, estate tax. The estate tax is effectively inheritance tax. And because
Someone
Singapore
can
doesn't
die,
and because Singapore doesn't have inheritance estate tax, people don't think about it.
Yeah.
But overseas, every country has estate tax, right?
Yep.
So you have to think about the risk that, who knows, right? You and I, we don't know. So we have to be aware that that is a risk, and if God forbid, something happens to you, you have exposure in the US market, they will hold it. Your family and your loved ones will not have access to it.
I see.
And then they will charge a fee.
It's dying twice, man.
Yeah.
First you die, then the amount of money the US government take away, you die again.
And then your loved ones can't access that money for a long time.
I see.
It's going to be difficult. So
Okay.
there's a lot of issues that we need to solve. And so Endowus launched with Singapore domiciled, Singapore located, Singapore funds. So even though it's investing into global markets, they're all Singapore funds, right? So that's really important because there's no estate tax if you buy a Singapore fund that is registered locally, is approved by the MAS, and it's on the Endowus platform. Now, we have other funds, but most of the funds that we use, especially for CPF, especially for the things that we mentioned, all Singapore domicile funds.
So just to
No
be very
estate-
clear, just
No
now,
estate
Lion
tax.
Global, no estate tax.
No, Amundi,
iShares, no estate tax. Amundi, no estate tax.
no estate tax.
Wow, that's very important, you know.
Very important.
That's very, very important. Yeah, that's very, very important. Okay. Yes. Okay. So any other question on this? Oh, there's so many questions. Okay. So someone asked a very interesting question. It looks like Endowus doesn't make money at all. So how do you all survive? That's
so-
not true. You do make money. That
We
just
make
now that
money, but it's very
0.3
small.
The 0.3%, right?
And our revenues are very small, but this is why it's a venture investment, right? That's a lot of how does Endowus
Yeah,
make
yeah.
money. So what we're doing is changing the industry for the better. So a lot of the fees you pay to your insurance broker, your financial advisor through insurance-linked products or your unit trust-linked products, all the fees you pay to Fund Supermart, Dollardex, Poems, DBS, the banks and the brokers and everybody, all the fees you pay, a lot of it you do not know you're paying. It's not transparent.
Okay.
Because normally if I buy, let's say the most popular fixed income product in Singapore is PIMCO Income Fund. PIMCO Income Fund is a great product, great fund, huge returns generating consistently over time. And PIMCO banks sell a lot of this fund everywhere. But most people buy the retail share class of the fund, which is 1.45%. Now Endowus went to PIMCO and said, why do we need to pay 1.45%? And they say, well, 1.45% is what we charge the client. And then we take 0.7 or 0.8% of that and give to you for selling it to the client with these fees that are hidden. And we say, well, that's not fair. We want to be transparent and we want to show exactly what clients are paying. So we get that 0.7, 0.8% and we give 100% back to our client. And instead of doing that, we charge our client transparently a fee that you can see. So instead of getting 70 basis points, we're actually charging you 30 basis points for buying the same fund. But not only that, because we're doing that, we can access the PIMCO fund at the institutional rate. So institutional rates that, for rich people in private banks or for GIC type institutional investors, you get to access it at lower cost. So we get it at 0.55% instead of the 1.45%. So if you go to a normal bank, you would pay 1% upfront sales charge, 1.45% for the fund. That's 2.45%. At Endowus is 0.55% because we access the institutional fund, and then we only charge 0.3, so it's 0.85.
Okay.
So that is half the cost of the actual underlying fund and 1/3 the cost if you went to a normal bank.
Okay, just to be clarified, answering your question, this question came out a lot. So, but Amundi and iShares, although they are registered in Singapore, they're domiciled either not in US but in some other countries. Will we be hit with estate duties or not?
No, it's Luxembourg domicile. So
Yeah.
when you say it's domiciled, it's where the fund is registered,
Yep.
the underlying fund, right?
Yep.
And they try to find locations where the fund manager is located or where the fund manager has a low cost, like scalable business, which is Luxembourg or Ireland or wherever, because costs are cheaper there than London or cheaper than Singapore. Now, when we bring that fund into Singapore, we have to register it with MAS, right? US ETFs are not registered here in Singapore. They're not in Singapore dollars. Amundi funds are locally registered in Singapore, and it's in SGD, Sing dollars. So you don't have to change FX. There's no estate tax risk at all. So I categorically, again and again, I repeat this, but no estate tax on the funds that you buy on Endowus, which is how we designed it from the beginning when we first began the business, so that we can build it for Singaporean investors in Sing dollars, for CPF and SRS and cash.
Okay, so can we a lot of people asking this
Shares, iShares.
this is the Amundi one, right?
Yes, yes.
Okay, so maybe you
So
can
this
just
is Amundi Prime
I
US
think you're
fund.
going to show it this way.
This way, yeah.
Okay,
That's a
yeah.
good idea.
and then iShare is the
Amundi Prime US fund.
iShare which fund?
iShares US Index Fund.
US Index Fund.
Yes.
Okay. Yes.
The
Screen
YouTube
capture,
is
huh? Screen
that one.
capture.
And then
Okay.
this one is
I
the
suspect YouTube.
iShares US Index Fund. There you go.
Okay,
Yeah,
I'm going to
yeah.
show you guys. Can see. Okay.
The
Just
two
in case you all
names.
cannot see, I flipped the other way. I don't know whether it's.
No, I think that's right.
No,
Is that right? Maybe
sometimes-
not.
yeah.
Sometimes reverse.
Okay,
I think
Ken.
this is reverse.
I
And then
don't know.
here.
Okay, this one is definitely this way.
Yeah.
Okay.
Okay.
Ken, huh?
Done.
Okay.
And if you have any questions, again, support@endowus.com. We're here to support you, help. We have dedicated client advisors licensed by the MAS. So we're not completely digital. If you want to ask, you can do email, you can phone, WhatsApp, Facebook Messenger, email support@endowus.com, or phone calls, or you can schedule an advisory service, 15-minute calls, or you can go to the weekly call that we do, where our Endowus advisors help you along the way.
The main concern of iShare US funds is the synthetic replication. Any comment on that? I think he
Yeah, we
answered
did
that question
earlier.
already.
No,
Right?
it's pretty safe. Yeah,
Okay.
it's very
Can
safe.
you post the fund on your Telegram channel later?
Yes, we will.
Can you just do it
Shang
right
Shi,
now?
Shang Shi will do it now.
Can you share which fund did you buy at Endowus? I always been buying the Line Global 500, but now, as you can see, I flipped
Oh, you just may
50%.
put it.
I already flipped 50% of it. Okay, I already flipped 50% of both funds to iShares and Amundi already. Okay, cool. So I'm not. Hey, hello. This is me, Lou, the customer. I'm the investor. I'm buying. I'm not saying you must do it. You all go and think yourself. I'm doing it myself. Okay, don't later you all go complain MAS. Then I get a phone call from MAS.
It wasn't Lou, it was me.
Yeah.
And I'm a licensed MAS
So he can
financial
sell.
advisor, and I'm not selling, I'm advising.
Yeah, advising.
I'm advising
Alright,
that
whatever.
if it's the same index, then choose the lowest cost. It's better for you. And then, solve for FX, lower cost Sing dollars. It's locally registered, so no estate tax. iShares in particular, even better because zero withholding tax. So it is the best product to sell.
So
We'll talk about markets.
So what about those
around.
people who have your flagship portfolio fund?
Yeah, so flagship portfolio,
Can you
sorry,
flip-
there was a bit of a delay, but we will be doing it automatically for you. So look forward to that. Any new investors creating new goals will go into the new funds. So, and then within a week or two, hopefully we'll have good news. We need to change the technology a little bit, and then everybody will be given a recommended portfolio change. And this is really important. A lot of these robos or other managers, they just change it without asking you and just, change allocation. Like some people sell at the bottom and buy stuff that you don't want. We always give clients the choice. So it's an advisory model, not a discretionary model. And we give you a recommended portfolio change, and we tell you why we are changing, from a Line Global to an Amundi or to iShares. And then you need to make that choice and say, yes, I accept. And then they will switch it over for you.
Okay,
automatically.
so for new customers, there's a $50 discount voucher, especially for Premium and for 1865 customers. Okay, this is the QR code. Okay, this is the QR code. I hope it's a bit too bright. I think. Yeah, it's a bit too bright. Okay. Oh God. All right. Everybody, please scan right now or take a screenshot of this. Okay, this is a QR code. Please do it. $50. Okay, $50.
Normally
$50
only
fee.
give $20.
So, hey, hello. People give me face. At least those click like walao eh. Okay, anyway, so okay, 50. Okay, so $50 voucher. I'm gonna hold it for another 10 seconds. After I won't show this again. Okay. All right. Screenshot this. Okay. Screenshot this. All right. Calling 10, 9, 8, 3, 2, 1. Okay. All right.
Put it on the, I think the
Anybody
or something.
Yeah. Okay.
Yeah.
So so how come there's a 5% cash for iShares though? Am I not choosing the right one?
No. You see, sorry. On the underlying holding of the fund changes all the time. So it captures at the end of the month, each month, what the allocation, and then we get that data, we upload it. So we just give you transparently what the underlying holding is. But as I said, what they do, Blackrock does several things. So one is replication through synthetic, and then they also sometimes lend, get interest rates on the cash as well. So they've
Same
actually
sheet.
historically
Can you put the QR code on the
outperformed
Telegram chat?
outperformed the S&P 500. So iShares has outperformed the S&P 500 over the long period.
So for those people who cannot get a QR code, go to our Telegram chat group. We'll put it up there right now.
The link there as well.
Okay,
Yeah.
where's Telegram? Okay, I'll just show, because I know a lot of customers are not on Telegram.
Yeah, and there's no transferring fee, there's no cost involved in using the Endowus platform, just the fund level fee that Amundi or Blackrock iShares will charge, or the Endowus fee, which is transparently shown and the lowest cost in the market.
Okay, there's a very important question that everybody is asking. Okay, number one is, we invested in the Line Global Fund, when the S&P fund was 3,900 points or something like that. How come up till now I don't still see a profit?
Huh?
Yeah,
Line Global.
yeah. Okay.
If the Line Global index is up, then you would be up.
No.
Yeah.
The S&P 500 was 300 points.
Yeah.
3,900 points when we invested.
Yeah.
But now, the S&P 500
Where does
has
it say
gone
that?
up.
Where does it say that? Yeah.
I also experienced that.
Yeah.
Now it's 4,100 points. How come? How come we don't make money? And I know the answer.
Oh yeah, I mean it's okay. It's the currency
Yes.
effect, right? Because if it's in US dollar return, then it would be exactly the same, right? But we show you the Singapore dollar exposure that you have. So as a Singaporean, you need to be diversified for this reason, right? Because the dollar currency movement is actually going to affect the return as well. So it's a market return, and then converted into Sing dollars is your actual return.
Okay, the Telegram is in the 1865 Telegram group. Okay,
But again, this goes to, we were going to talk about markets and macro as well.
yeah,
but,
I'm coming to that. Yes.
yeah, but this is important because I think that the Singapore dollar has historically always appreciated against the US dollar over time. And so if the Sing dollar appreciates, it is going to impact the returns as well.
Okay, there are quite a few individual customers already actively doing it. Got questions? Can you please? I'm not gonna customer service you guys here. Can you please go to support@endowus.com?
Yeah, so Sharon just said, what if I just open the account before you finish the code, flash the code? You will be applied the discount. So please, Sharon, email support@endowus.com and let them know, and we will apply the $50 discount for your account.
Okay.
So please reach out to our client advice. They're reasonable, very nice guys. So
Okay.
don't worry.
Hey, hello! I got this $50 discount for you guys. Okay.
Yeah,
Yes.
Normally we don't give more than $20, but
Yeah.
it's only for the loose friends basically.
Okay. So
on M65.
appreciate it. Appreciate it. Okay. And please, for the char siu rice that he didn't give me, you all can give me. Okay. Yes, I will never forget char siu rice and I insist
No,
that
I want to go.
I only that char siu rice. I don't
That
any
char
other
siu rice.
that char siu rice.
Precisely, it's our favorite.
Okay. Does this
I'm gonna look
discount?
up where it's open.
Does this discount apply to existing customers but haven't made the first buy yet?
Yes.
Okay, that's great. Okay. Now the other macro question is, now China, Russia, Brazil all ganging up, and they're gonna say we're gonna move our US dollar.
Commonwealth. Chelsea
Okay.
moved to Commonwealth.
Oh, Commonwealth rate. Okay,
Yes,
we'll
we
go
go
there.
there.
We'll go there.
Yeah.
So there's a lot of people say that the US dollar now is going to collapse. China is going to replace as the world leading currency, or euro is going to stick up. Everybody's moving away. We already get hit. When the US dollar is 1.45 or something like that. Now it's 1.33. The rise in S&P 500, we didn't really make a profit out of it. Okay, so if this were to happen, it's even worse, right? What's your view on the macroeconomics of the US dollar?
Yeah, US dollar is affected mostly by two things. One is the rate differential. And when I say rate differential, it means the interest rate that the US is giving for its money versus Singapore dollar interest rates. And so, or Chinese renminbi interest rates, or UK GBP. So the rate differentials is going to make a big difference, because if you think about it, you would do the same, right? If you had some cash and US is giving you 5% yield, and there's no FX risk in owning USD, then you would move some money into USD to get the higher interest rate. And so when US started raising interest rates from 0 at the end of 2021, and raised it very rapidly throughout 2022, what happened was a lot of money got sucked into the US, because that's the higher interest rate. And a lot of money left the emerging markets and Asia and other markets. And so as a result, the US dollar always strengthens when interest rates are higher there, or the economy is doing well, or there's a lot of earnings and a lot of attractive investment opportunities. Then money gets sucked into the US. The other extreme is when things are really bad. So Ukraine war breaks out, or the banks go under, or COVID hits. Then what happens, you will see all the time, is that the US dollar spikes up because a lot of people have this flight to safety instinct. So what is the safest asset is US Treasury bills, US government bonds. And so people move money back into the US whenever there is a crisis. And we call that the dollar smile. My ex-colleague at Morgan
Dollar
Stanley
smile. Okay.
made this name up, but the dollar smile means extremes of very, very bad situations, like crisis, then everybody runs to the dollar. Or things are really good, economy is booming, earnings are very great, then everybody puts money into the US market, or US real estate is great, or the interest rates are very high, and so US dollar looks attractive, then you go into USD. But all other situations, normally the US dollar is, mediocre or weakening versus especially currencies like Sing dollar. So Sing dollar is entering a phase where it's most likely going to appreciate against the US dollar because the Fed interest rate hike is almost peaking, and maybe end of this year, next year for sure, interest rates will start coming down.
So what
the
do we
rate
do?
differential will go down. I don't think we'll move a lot. So I don't think this is going to make, an FX trade is going to make a huge amount of money for us, because currencies move much less than stocks and other things. So compared to what the equity market or fixed income market does, the FX is not going to move as much. So I think one of the best ways to do it is to actually expose yourself more to fixed income. I think this is a cycle where you want to own some fixed income because interest rates are so high. We didn't have to touch fixed income for so long because it was zero yield and interest rates were coming down and we made some money, but that's ended now. So with interest rates where they are, on the way up, obviously you lose money in fixed income, so you wanted to avoid that. But now at this point, yields are very high, and if interest rates start coming down, then you actually have both the benefit of high yield and also capital gains from fixed income. So
So there are two questions.
Yep.
My earlier question was, do you see a scenario where US dollar will collapse?
no. So this whole de-dollarisation trend is something that's been talked about for decades. We talked about the demise of the US and the US dollar for a long time. Obviously, I think it was way, way too early. Now the conversations are serious, and the BRICS countries, the Brazil, Russia, India, China, South Africa, these countries have become much bigger, and China has become much bigger. So it is important, but we've had other phases where Europe became very big, Japan became very big, even Korea and the tigers everybody said was going to take over. But the US has stood still because of various reasons. But most important thing is it's still the most used currency for trade. It is where all the financial markets are traded mostly, and it represents the biggest portion of the stock market globally. So the US dollar financial market or trade, I think could change. Trading in renminbi or trading in other currencies could increase, but the financial market is so dominantly US dollar that I don't think will change.
Okay.
So it's too early to talk about de-dollarization.
Okay.
Still.
So that's a very good one. You talk about fixed income bonds, basically. What products do you have in bonds?
We have a lot of selection, so it's
What's a
mostly...
good? Just give me
Yeah.
two. Don't give me one. Don't
Okay,
give me 10.
PIMCO Income Fund is the most popular fund in Singapore and across Asia. And the reason is because it actually has generated very good returns over time. And then a globally diversified, fixed income product. So we have just launched the Amundi Global Ag and also the Blackrock iShares Global Ag for low cost passive fixed income that gives you some exposure. But,
What's the returns of it?
well, it depends on the cycle.
Don't talk about appreciation or so, but just the fixed income means you have got
So the yield,
right?
The yield is for the passive index funds will be lower, like a 4 or 5%. That's lower. And
That's
then
not low.
PIMCO Income Fund is 7%.
You kidding? No, but
And there are other products that are going to give you even better yield. And this is not for everybody, but if you're an accredited investor, then like Lou, then if you're an accredited investor, you get access to some private credit or alternative like credit fixed income products, which can generate even higher yield, up to 10% yield as well, because they
Fixed income.
fixed income private credit.
In
English, it means that you're not buying a bond issued by a huge like company.
Junk
You actually not junk bonds, investing into projects or deals.
What's the risk?
Well, the risk is that the project blows up, but the projects they invest in is actually, it's like any other company has credit risk. But private credit gives you better returns because of the liquidity, not because of the higher risk.
Okay, so take those accredited investor one aside, which a lot of people cannot invest. So PIMCO bond fund.
Yeah.
Okay, you're saying that,
But what I would like to say, Lou, is that
Yes.
not every fund is for everyone. So what's important, as we always say, and we want to be a trusted advisor. We don't want to just sell a product or sell a fund to you. We want to be a trusted advisor who comes alongside you in this journey. And this journey is not just this month, I'm selling you a fund. This is for decades. Your CPF investing, your personal savings for retirement adequacy, for your children's college fund, your education, your health, medical savings, all of the house, all of these are investment goals that we have. So as individuals, we have financial goals. We have to invest in the right way, taking the right amount of risk for the right goals that we invest in. So everybody is different. Everybody has different amounts of money. Everybody has different risk appetite. Everybody has different needs, and we're investing for different goals. So what is important is investing in the right way for the right goal. So fixed income is suitable for a certain goal that you have. For retirement and you're investing for 50 years, you can invest 100% equity and just close your eyes and keep going like Lou always says, because that's the right way to do it. So the best way to do it is maybe have a conversation with our advisors. Our client advisors are here to help you. And look at all of the research that we have, a lot of great written and webinars that we have on Endowus Insights, and you'll learn a lot about how to invest in the right way, because you're not going to learn this overnight. Like many webinars from Lou is helping you, and then more webinars from Endowus, and then read some books, read some articles, and try to learn yourself, because this is the most important thing in your life. You read and learn about many other things, but this is what's actually going to impact your life and your future and the future of your loved ones. So you have to spend the time and effort to improve your financial literacy and improve your investment.
okay, so is it the PIMCO GIS fund, local bond fund you're referring to?
That's right.
That's the one, okay? That's the one, okay?
A difference between accumulation and distribution.
What's that?
So it's asking.
Yeah, what's that?
Well, so
What's the difference between accumulation versus distribution?
Yeah, so accumulation and distribution is very, very important for us. We have from the beginning told our
I
investors,
think
yes,
that's exactly
that's what it is. Yeah.
And then we can also talk about that method.
Yes, precisely.
Okay,
We'll
okay.
talk about it.
Yeah.
Because from the beginning, Endowus has always said that investing in accumulation over distribution is better because it's more efficient.
Comb my hair now. Okay. I got hair to comb nowadays. Okay.
Okay, so a lot of funds receive dividends or interest income, and they have payouts. A lot of them will just say that, hey, keep it in the fund, reinvest it, so that any dividends or income we get, we reinvest into the fund, and therefore we keep building wealth, and it accumulates and compounds. That is the efficient way to do it. That's accumulation. But a lot of people, especially in Singapore, want cash. They want payout. And so what fund managers have created is these distribution share classes, which is the exact same fund, but rather than reinvesting very efficiently, they tell you, oh, you get to get cash. So in a way, this was a kind of a gimmick that banks used to get people to say, hey, this fund is great, you get cash.
Yeah.
But it's actually very inefficient because you're taking the cash out from the fund. A lot of these funds tell you that they give you dividends and interest, but they're actually taking money from the capital. So although distributing is 4%, return is 2%, how did they get the remaining 2%?
They sell
From
your capital
money.
down.
Yeah, your money is used to pay you back.
Okay.
So it's BS, yeah. It's
So just to make it very clear, there are two types of funds. Okay, one is the dividends, they reinvest it
automatically.
automatically. That's the best, and everybody should do that. Okay, that's how you get the full power of compounding. Okay, then there's the one that give you out the dividends in cash. Okay, you have dividend, so you collect money, and Singaporeans love dividends. Love dividends, right? But you know what? Okay, a lot of them steal your money and take out money from your capital and then give it to you, right? So this is now a nice dovetail into this. A bit of saga involve a small group of customers that came out in the social media. Okay, so what I heard, okay, and I will get Sam to, there's this group, a handful of customers, cry father, cry mother, wow, I didn't receive my dividends, walao, Endowus Chalui, go report to MAS, whatever kind of thing, right? So I think this is also good to let Sam, this is exactly the problem. Distribution versus accumulation that caused this problem. Okay, maybe Sam, you can describe a little bit on that.
Yeah, so what happened was that there was a delay in the payment of dividends for this one fund in particular. I think it may have affected a few more funds, but it's a delay. So it was a few days longer, and this one particular fund was delayed quite a few days, quite a long period actually. So the problem exists, and so first thing we need to do as a trusted advisor is to apologize and seek your understanding and tell you that this was a mistake. Now there is a reason
it's not
why.
Your fault lah.
Yeah,
it's not Endowus' fault lah. It's you. It's UOB Kay Hian. He cannot say I can say because I'm not Endowus. It's UOB Kay Hian lah. Then you all shoot the sales arm.
Messenger.
Yeah, it's the UOB Kay Hian that causes problem lah.
So the first thing is that the most important thing, Endowus never touches your money. So when we began Endowus, we made absolutely sure that we have this, breakup where the money that our clients invest into the funds, the cash that you put into, is never put into Endowus. So we never touch your money, we never have access to it, we cannot pull money from you. I think there was a robo which had like this pulling money function, and they kept pulling until there was no money left in the client's bank account. Those kind of things can never happen in Endowus. Okay, so we can never touch your money. We created this partnership with UOB Kay Hian so that you can actually safely store your cash, safely store your investments. And even if, God forbid, Endowus is not going to disappear, we're growing very well and doing well, but if we disappear, you can still have UOB Kay Hian, which is owned by UOB Bank, the one of the biggest
UOB Kay Hian
ones, right?
falls?
UOB one.
Yeah, I'm just saying. That's
No, just
that would
like
be
everybody.
serious, right?
Yeah, that would be serious. That was when Singapore will go bankrupt,
Yes.
basically, right?
That would
When
be
UOB
serious.
Bank will go bankrupt.
So you don't worry whether Endowus will go, chipaboom, right?
you don't have to
You
worry
gotta be
about
worried whether UOB Kay Hian will go chipaboom.
Yes.
Okay.
So UOB Kay Hian custodizes, we call the word custody. We are custodizing like a baby, like your assets. Okay? And then what happens when you have a dividend payout is the fund that you buy will distribute the dividend. So they collect from all the companies or the coupons or interest payment or dividends, and then they will collect it, and then every month or every quarter they will pay it out. So the fund manager goes through what's called a transfer agent, which is normally a bank, like Northern Trust or Citi or State Street, and they will transfer the money to the custodian, in this case UOB Kay Hian. And the UOB Kay Hian will get a notification from them telling them that this is the dividend they've received. And the unit trust division will send a memo telling the finance department, this is the amount that you pay to all these clients. And at the same time, they tell us, exact same time they tell finance, we tell us, and then we tell our clients, this is the payment of dividends that has gone out. Now, that process got broken, and
in that one fund or whatever.
in that one fund, the Blackrock China fund, and it was
Okay.
delayed. It affected very, very small number of our clients, and they've all been paid. All the delays have been sorted out, so it was a few more days, and then it's all been sorted out. And this is the problem with dividends, that it does take a long operational process to pay out these dividends. If you're in accumulation share class, no effect. If you're in CPF, if your fund is in CPF, no effect. Nobody was affected in CPF. Nobody in accumulation share class is
SRS?
affected. SRS, I'm not sure.
Okay.
I don't. Well, if Blackrock China fund, one fund
Yeah.
is in SRS, it will be affected.
Okay.
It's just one fund, right?
Okay.
And so basically, the bottom line is that Endowus never touches your money. Your money is safe. There was a delay. There's no, like, Endowus is not keeping your dividends. And we want to be transparent and tell you exactly what's going on so that you know what's going on. But, you should be investing in accumulation share classes and not in distribution share classes in the first place, because accumulation share classes automatically reinvest at the fund manager level. So it doesn't have to go through the transfer agent, the custodian, Endowus, or anybody.
Exactly.
Just reinvest into the fund automatically, and you keep compounding your returns. And if you need money, or if you want distribution,
Sell the shares.
sell the shares, sell the
Yeah.
units, and then take it out. Endowus will efficiently take the money out every month if you want. We have clients who have monthly distribution set up for the exact amount they want. Dividends don't give you exact amounts. They give you $56.28. Next month is 47. No one knows how much they pay out. So, you want to have regular income, then invest, compound with accumulation share classes over the long term, and then have a redemption where you take out exactly $500 every single month without any exception. And Endowus has set it up so that you can do that.
So let me say from from my perspective is this, okay? If you want dividends, okay, then don't go and invest in S&P 500 or this kind of thing, right? Those things don't give you much dividends. Give you 2%, 1%, whatever, like some
Go
shit.
for Pinko income. Yeah.
You go for income funds or something like that. You cannot have the best of both worlds. If you want dividends, okay, go for dividends fund. If you want capital appreciation, you go for S&P 500 and other MSCI World Index, dimensional funds or whatever. They increase in capital value. You cannot have both. No such thing in the world. Never seen before. I mean, you can have accumulation fund with some miserable dividends, then might as well put it back. Yeah, okay. This Singaporean thinking, I want everybody to change. Yeah, even my dad have that thinking, right? Oh, when I invest in capital growth, I say, no dividends. And when I want dividends, it doesn't grow capital. Doesn't happen to both worlds lah. Wake up lah. Yeah, okay. So
one quick plug. So Endowus has these income portfolios. So we designed these income portfolios, and it includes the Pinko income, includes some of the other great dividend paying or interest coupon paying funds. So we have 3. So Endowus income portfolios. Go to the website or your app, and you can see the choice of an income portfolio, and it targets different yields. So the secure one, you invest in 100% fixed income, very secure fixed income products. Safer, like government bonds, you generate 4-5%, maybe about 5% these days. And then you have Endowus income, higher income, which is investing in slightly riskier stuff like emerging market bonds, high yield bonds, high yield dividend. We add a 20% equity dividend paying portfolio as well. So you can grow income a little bit, but get paid much higher, like 6-7%. And then we have the growth future income. So for younger generation, you want some income, some pocket money maybe, but you also want to grow your money. So we put 40% equities and 60% fixed income and give you a 4% plus yield. So there's different income portfolios for different age, right?
Different type of people.
Different type of people, and for different purpose. Younger people need to grow their wealth. Older people need to safeguard their wealth. So all of these things are produced at Endowus so that we can help individual investors have more choice, get the advice that they deserve, and produce portfolios that is at the lowest cost possible here in Singapore.
Let's talk about macros right now again.
Yep.
So right now, the world is, I've never seen a situation where you've got so many black swans coming. It's rare to have one, right? Now, like flock of black swans are coming, right?
Yep.
So right now, you have Ukraine-Russian war where doesn't seem to be an end to this conflict, okay? And now we have OPEC driving up oil prices.
Yeah.
You've got China reopening, but we don't really know what's happening in the economy. And then we've got possibility of a US currency issue. Then there's also a US-China conflict and things like that, right? So in this kind of very unusual environment where things are very unstable and things like that, what would you suggest?
Yeah, I mean, well, I began working in 1994. So next year is 30 years.
Wow, you don't look...
So
yeah,
30 years, I mean, we're the same age. So
you look younger than me. Yeah.
Huh?
You look younger than me.
No.
Okay.
So basically, we saw 1997, the Asian financial crisis. Countries went bankrupt. 99, tech bubble
Cool.
bursting.
Yep.
2008 financial crisis, everything in between, European crisis, COVID now, and this cycle. And it's not different. There's always cycles, and there's always markets that do go down in the short term. But long term, the markets do what they do. Now, black swans are not black swans anymore because there's too many black swans. And so, I think the macro flock of black swans we've experienced.
Yeah.
And to think that this is worse than 99 or worse than 2008 or worse than 1997.
Not really. Not really.
Yeah.
Not
and
really.
I've written an article about this on the Endowus, where there was this massive guru called Barton Biggs, legend of Wall Street. And he's the one that started Morgan Stanley Investment Management in the 70s. And he visited our office in 2008 during the height of the financial crisis. And we thought, Morgan Stanley was going bankrupt. We were all going to lose our jobs, and we were never going to recover. This is a Great Depression, like 1923. I told him, "Is this like the Great Depression?" And he said, "No, this feels more like 1974." And I was like, "What? 1974?
What happened?
Like, what happened in 1974?" But basically, he said that was worse than 2008, and he called the bottom of the market and said buy. And in 2009, and it was within 2 weeks of the market bottoming. So being bearish at the bottom is the worst thing you can possibly do. Right? And this is why regular investments, because being able to go into the market at the bottom is only possible if you're already invested. And you will only put that money in if you already have money in the market. And so staying invested through the cycle, downturn and upturn, is what gives you the 7% or 10% return over long term. This is not worse than 1974. This is not worse than 2008. This is not worse than, even COVID, let's assume, right? So this is a normal cycle. This normal tightening cycle. This is a normal cycle. We have to take it within the context of the cycle.
Very good, very calming, right? This statement, right? It's just one of the cycle. It's not the end of the world. Okay, I think that's good. There's a lot of questions about technical things about Endowus. Can you please don't ask a question here if it's like why my account does not work or that kind of thing, right? Just email support@endowus.com. Okay, support@endowus.com. I don't know how people are like.
We're putting it up on the chat.
There are people here. Support@endowus.com. If you don't know how to email support@endowus.com, you can also ask in a 1165 chat group,
Yes,
okay?
1165
Because one
chat group.
Endowus colleague is answering those questions here, okay? I try to pick up the more important and macro questions right now.
First of all, if you're not joined in the 1M65 chat room, please join the chat room, because Telegram 1M65 is an amazing resource where a lot of people like yourselves are learning about how to invest from Lou and many other people who are in there. So you should join the chat room. And if you join the chat room and you put questions up there, then not only Endowus, but a lot of people can also help you, because they've gone through this journey just like you. So they will put the answers up there, help you along, on that journey together. And Endowus, Shengxi and other people will be able to also contribute to that community. But if you have any specific Endowus questions, then please just reach out to Endowus, please.
So a question, Mr. Lu, do you think that most black swans are priced in already? By virtue that it's black swan means it's unanticipated. If it's unanticipated, it couldn't have been priced in. Okay, so
There's two ways to look at it. One is that the black swan, if it happened, is priced in.
Yeah.
Future black swans is a black swan. We don't know what
Exactly.
is a black swan.
So I cannot tell, right? We only know there are few events that are likely to happen. So most of case, I would say, I know, a large proportion of it is priced in.
I talked about this at the Bloomberg TV Thursday. Yeah.
You know what? Xingxi, can you pin the link of the Bloomberg TV for our fans? Please go and join our Telegram chat group. There's a hell of information there, and there's a group of community experts. They are far better than I do helping you to answer questions. They don't collect a single cent. They do it out of the heart. Okay? I don't collect anything from Endowus, please, okay. So don't think that I'm getting money out of this thing, okay?
But I did say in there that a lot of the Fed hike is priced in. Sticky inflation is probably priced in. A lot of things that we already know are normally already priced into the market. And so, it's normally the things that we don't think about. Ukraine, we didn't know. COVID, we didn't know. But then once it's out, a lot of it becomes priced in, and the market falling 20% would normally mean that it's priced in.
Okay, so Elaine asked, what's the fair time frame to see capital gains? 10 years, 20 years? Okay, what's a reasonable rate of return we are looking at, right?
Okay, so this is a good one because the answer is depends when you invest in the cycle, right, and how much you invest. But if we divide up the markets and say, look at the 1 year rolling return, any period like 1 year, 1 year, 1 year, 1 year, and see what the average return is, that's 7%, right? 7 point something percent. But if you invest for how long you never lose money in equity markets, that's about 12 to 15 years. So if you invest more than 15 years, never lose money in the equity market. Never ever in the history of mankind. So
No, when I say
being
equity
long-term,
means
stock market.
means big funds and things like. If I
Yeah,
buy Singtel,
no.
if I buy
Single stock.
if I buy
Broad
Singtel,
market.
if I
Yeah.
buy SPH, it
Or
can
Silicon
go to
Valley
zero.
Bank.
Yeah, or Silicon Valley can go to zero, right?
Yeah.
So
broad market, if you invest for the over 15 years, you will not lose money. And if you invest in the right point in the cycle, 5-10 years is a good period to see capital gains. But over 30 years, you want to be invested for 30, 40, 50 years, right? Because then you start really compounding and it becomes an exponential return for you.
okay, there's a few questions on this.
Yeah.
So lump sum investing versus dollar cost averaging or any other kung fu you can share your opinion.
So depends on the cycle, but if you're investing in a downturn, lump sum obviously does worse than dollar cost averaging.
Downturn.
Right? Downturn. In an
Okay.
upturn, lump sum always outperforms dollar cost averaging, right?
Why?
Because you put 100,000 when markets are zero, it goes up 10%.
Oh, okay.
And you're putting only 10,000, 10,000, 10,000, 10,000, and you've lost the returns every time because the markets are going up.
But what if I buy on crashes?
Yeah,
bottom.
crashes are great, but you can't pick the bottom unless you're
Of
invested,
course,
right?
of course.
So you dollar cost average in a downturn,
Okay.
and then when the markets are upturn, you put the lump sum, right? But you don't know whether the market is always going up or down. So lump sum over a long period of time does better, but we don't have peace of mind. We're very scared to do lump sum. Like Lou just now, Amundi is no-brainer versus Line Global. Blackrock is no-brainer but he's still only put 50%, 25% because we don't know. We're worried, right? And that's because we are human beings. It's normal. We have emotions, right? Greed and fear. So those emotions is what we need to control. And doing this helps Lou to make the right decisions over time. And so lump sum is difficult for most people to do, and that's why dividing it up into regular savings plans or break it into 3 or 4 installments gives us peace of mind. And giving peace of mind is really important because when we have peace of mind, we can think clearly and we make the right decisions.
Okay.
So do lump sum if you are confident and you're okay with it, but regular savings plans, definitely you should do if you have regular income, like you're working and you have salaries. You should definitely do regular savings because you don't actually have all that money right now. But also, even if you have 100,000 and you want to invest in it, you can divide it into 2 or 3 or 4 lump investments.
So what do you do? You are an investment expert.
I've always been fully invested, mostly with whatever I have.
So how do you do?
So I change the
lump sum
allocation.
or you DCA or
lump
what?
sum. But
Okay.
if my salary is
DCA.
It has to be DCA.
Even you.
Yeah, of course.
Even you know, come on.
No, you want to invest as soon as you can.
Yeah, you can, you can spot and smell, buy this thing and sell this thing, right? You're Sam, you're so smart expert. Even you do this. This is like low class investors like
It's a
us,
smart
right?
thing to do. Smart thing to do, especially for people who are not able to do lump sum. Yeah.
Even expert like him does that, okay? Yeah, So you don't pick individual stocks?
No, I used to do that at Morgan Stanley. I outperformed for 8 years, but
Surely you can
I
tell.
die.
Tesla.
Too much stress. And I'm doing professionally, 24/7. I'm thinking only markets, investing, researching. I have access to Tencent founders like Jack Ma. I meet and I ask questions about companies. I get to, access the best management, the best research from all the investment managers, and still I'm not outperforming all the time. I can't make, the answers all the time, and you don't know.
So
Yeah.
even expert like him cannot beat the market. Yeah? What do you think your chances are? Those
Yeah.
people like to buy Alibaba, Tesla, okay, individual stocks, DBS, OCBC,
Oh my
all this
God.
kind of thing.
Yeah.
I-
It's tough.
yeah.
Even professional investors find it tough. And now that I'm not full time looking at stocks, I do not trust myself to invest. So I invest in funds that have good managers or passive index funds. Broadly, a lot of it is passive, and then some other products as well.
But
Yeah.
surely, OCBC, DBS, and UOB sure make money, right?
Yeah.
Sure make money. How can, like, if I close and I these three banks, sure make money for next 50 years? What do you think?
You may not lose money, or you may lose not all your money, but I think there's better options out there. Diversified market options are much, much better than single stocks. We all know this. This is proven. This is historical fact. Yeah.
Okay.
For an individual investor,
This
especially
is
who are
not
professionals.
Mr. Lu saying, this is now mega freaking investment guru saying, okay? So some people say, Mr. Lu, you know standard, you whatever. Now this guy got stars on his shoulders, okay? Yeah, so you don't sell him, Okay. All right, maybe last two questions, okay? Last two questions. Anybody? Last two questions. I'll pick the best two questions, and then after we call an end, okay? Last two questions. Okay.
Was it?
Wait. Okay. Oh man, it's dead again. Sorry, guys. Okay. Okay, we've answered the question. Okay.
Yeah.
Yeah. Sam
invest
mainly
individual.
invested in.
I don't do individual stocks.
So what's your main portfolio? Yeah.
So my main portfolio is actually the Endowus flagship portfolio.
Your own.
I built it, so I trust it. So as I said, I think the S&P 500 is great, but I want to be more diversified, and I also want exposure to dimensional. So I like the fact that I have the iShares, I have the Amundi, low cost passive index funds, lowest cost in Singapore, lowest cost in history. So that helps, and then I put dimensional funds in there because it gives us exposure to the proven factors of returns. And then it also gives us, exposure to some of the best fixed income products as well. So I have a balanced portfolio normally, so 60% equity, 40% fixed income. But these days I've actually shifted to a 40% equity and 60% fixed income because I want to have a little bit more exposure in this cycle to the fixed income side.
Okay, there's a guy asked a very good question. In the current world situation right now, should we keep more cash or keep investing? What's the allocation should be like?
No, I mean, I think, assuming this is a dollar cost average in question, meaning that you have regular income every month coming in, you have a job, you have income, and you're saving aside maybe 20% of that, or whatever it is, or your CPF goes into your OA and the money is piling up there, you should be investing into the market every month. Because we don't know when the market is going to bottom. Maybe it's already bottomed because markets coming in this year, everybody was bearish. Everybody says, Fed is raising interest rates even more. Inflation is sticky. The market is up, 8 to 10%.
I saw that.
Yes. So you don't know what the market will do. And so you need to continue to invest because you cannot pick the bottom. So you continue to invest for the long term. Holding cash is the worst thing to do right now, because cash doesn't give you anything. A lot of people put money into T-bills and fixed deposits, but I think, in the US, what happened was $760 billion of money went out of bank deposits into money market funds. So it's almost $1 trillion of money, investors, like individuals and institutions, shifted money away from banks saying that's dangerous and put it into money market funds. That's why Endowus has always said you should use money market funds as an effective tool for liquidity management, investing in cash, because it gives you both good yield, but it doesn't lock you up. It doesn't lock your money up like fixed deposits does. It doesn't lock your money up like, the T-bills. And many people think T-bill yields are great, but money market funds are giving you 4% or 5% in US dollars even. So even the Fullerton Cash Fund is giving you great yield.
Like
so
what?
you should 4.4%.
Sing or US?
Sing dollars is 4%.
4%?
3.9 to 4%.
Really?
Yeah, risk free.
Oh,
So
risk-free.
it's never throughout last year. It's never lost you money. So Sing dollar, Fullerton cash fund, US dollar funds. You should actually be investing in that because it gives you daily liquidity, no lockup, so you can put it in, take it out the next day, whenever you want. On the Endowus platform, you're investing your CPF, your SRS, your cash.
Safe, right?
Only ones that you can do in a single platform is Endowus. We built it that way. We got the CPF and the government approval to do this CPF investing, and now you can do money market funds. And then for AI investors, we also have alternatives and hedge funds and private equity, private credit, all the sophisticated stuff if you want to as well.
Okay, there's a very good question, and I'll call it the last question because we have time's up. Okay, is that
We passed our time.
yeah, it's Singapore. Are you are you personally invested in Singapore, and why not? I know it's no, and I know is Endowus invested in Singapore, and I also know the answer is probably almost no. But why?
Yeah.
Because I guarantee you, 80% of people here are like humongous amount into Singapore equities or Singapore whatever.
Yeah, I mean, look, it's not something that is wrong. There's no right or wrong. But the bottom line is that Singapore is a small market. It's 0.5% or less of 0.1%, I think, of the global market capitalization. So you think about it yourself, like where do you spend your money? Like,
Singapore.
In Singapore, do you spend your money through Amazon, you use Facebook, you use Google, you use Apple phones, and you're using Netflix, you're spending money on Netflix, and you're spending money on global companies that are not Singapore companies, right? How much money are you spending on, a lot of companies and really, stock market is about a growth market, right? Companies need to grow to continue to maintain their valuation and grow and generate returns for you over the cycle to give you returns. And so what are the best companies to invest in? Is it Singtel or is it Netflix? It's that kind of understanding that Singapore is not everything, right? There is what's called a home bias. So Singaporeans will tend to invest in Singapore, Koreans will invest in Korea, US will invest in US. So there is a home bias when you're investing because you want to invest in things that you're more familiar with. But as I said, a lot of global companies are much more familiar to us now. So you need to diversify away from just Singapore. It's like diversifying away from just a single stock into broad markets. Diversify away from just Singapore to Asia, emerging market, developed market, global markets. And global market return gives you the most stable, less volatile return over the cycle, up and down. So Singapore is not, I'm not bashing Singapore. It's not that Singapore is bad. It's just that Singapore is such a small piece of the global market. You want a broader exposure to generate the returns in a more stable and less risky way.
All right, cool. Okay, our time is up. There's a lot more questions. I've missed out gazillion questions as well. Please forgive me. It's just too many questions and time's up. You can ask those questions in the 165 Telegram chat group, okay? We will, first of all, we've got people from Endowus answering this question as well. We've got community expert doing a cross balance, check and balance as well. And when the questions are important, I'll get Sam to answer those questions as well. Okay?
Great.
Cool. Okay.
We'll do it again.
Thanks, man. Thanks for joining us. Okay. And all you guys,
we're gonna have char siu soon. Now we know where it is.
Yes. Okay. Cool.
Thank you for letting us know.
Thanks everybody for joining us. Okay. Thank you. I hope you enjoyed this session. And again, to our Muslim brothers and sisters, Selamat Hari Raya and have a great holiday. Okay. Great holiday. All right. Cool. Okay. So thank you guys. Okay. Thank you guys. Okay. Thanks Sam and thanks Endowus. Thanks guys. Everybody here. There's a big team of people here answering a lot of questions. Okay. And thanks B. What thanks B? That's my wife. Okay. Yeah.
You have to thank your wife, Lou.
No. Yeah, thanks V for letting the premium more customers have a chance to listen to this as well. Okay, Jackie also thanks for sitting through us and everything. Okay, thank you. Okay, thank you guys. Okay, thank you. Okay, bye. Go, give me a minute. Okay, give me a minute. Hold on.